What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol HIPO for Hippo Holdings. This is an insurance company. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. The first thing I want to point out is that there was an increase in volume over the last two trading days, so I would imagine there will continue to be some more eyes on this than normal. And from the daily perspective, let's start off here by mapping out obvious areas of support and resistance. Then we'll jump down into the 30-minute and talk more about some structural nuance, just seeing, this is a general area of consolidation and balance, if you will, and this was quite an aggressive slide lower, right? So to me, we're going to look at this on the daily through the lens of Fibonacci as we normally do on the 30-minute, but just from the high all the way on up to the low. And you can clearly see that the 38.2 of this overall slide to the downside is still way up here at $6.50. So it's not like this is out of the woods by any means yet. It's not like it's clearly established an uptrend from the daily perspective, but there is some opportunity here since, again, a lot of eyeballs here, and there's some decent volatility on something that was sub 5 trading, 50-cent range. That's a good opportunity, right? So let's go ahead and take a look from the intraday perspective, but before we do that, we'll just make a note that the 38.2 is at just about that $6.50 mark. Looking at the 30-minute, just as we always do, the first thing I want to point out is that, yes, I am aware that in the after-hours session, we are up around $5.75, but I quickly want to, again, gauge the strength of the buying activity that happened intraday, and then we'll talk about the potential for a gap into the bell on Tuesday, not Monday, Tuesday, because Monday is a holiday. We'll first take a look at this move here. You can clearly see that on the move higher, we did consolidate in that 38.2 range, made a secondary pop. It would be interesting to me if we go from the low of this all the way on up, if we get a click, thank you, up to the high. What you'll also notice is that the 38.2 here was resistance, right? That's where the breakout came from, essentially. And then on the pullback here, we respected it, resistance, and breakout happened up above. So it would seem important to me that this 495 area finds its way onto our 30-minute intraday charts as a 38.2 retracement, as well as a structural area, right? So we'll remove those fibs now, and that is the number that we want to pay attention to. So ideally, going forward into the remainder, or the upcoming week rather, I would love to see that if we do open on a gap up, and again, we'll talk about these scenarios in a moment, and we pull back to fill the gap and even move lower, this is the area, this is the number that has to hold to remain bullish here inside of Hippo. If we give it up, I would argue it's very likely we come back down to the bottom end of the range, close to about $4.15. So 495, line in the sand. Now let's discuss what's going on with our potential for a gap. So we'll turn on the extended hour session, and you can certainly see that into the end of the day, this last post-market push ended on a strong green note. So what we'll do is just assume that we're opening up here. Let's say that there's an arbitrary overnight high set somewhere around 595. Now let's discuss how we're going to trade this, at 9:30 on Tuesday morning, right? If you're someone who wants to be out of the gates watching Hippo. So the first thing we would do is watch for a gap and trap, meaning that we open here, fail to take out the overnight high, trade back down through the open. You're looking for a short, and we'll talk about that in a second, to come back down and fill the gap essentially to today's high, Friday's high, at $5.45. Can you even short this, though, is the question. So over to the trade tab, over to all products, and what you can see, of course, is that there is an options chain. I can't imagine that there would be easy to borrow shares here on something like this, but the options chain is okay, right? We'll say okay at best, simply because the open interest is kind of there, but certainly not the actual volume that went through on the day's trading session. So I would kind of just avoid longs if we get the case of the gap and trap, and we see that move again to fill back down towards 545. From there, you're looking for the gap fill reversal, right? That's a play that looks like this to get back into those overnight levels, which we've just potentially mapped out. Remember, a lot can happen and change between now and 9:30 on Tuesday morning, but for theory's sake, this is essentially how you would go about navigating those numbers. The flip side of the coin is the fact that we could get a gap and go, meaning we open here, consolidate in the overnight range, get a breakout of the overnight high. You're looking at your next major area of daily resistance, which, as we know, is coming from a Fibonacci retracement actually at $6.50. So that would be the upside target there. On any upside continuation, please keep a close eye on volume down below. You want to see it remain elevated. You want to see a lot of eyeballs and interest in this name for that upside continuation over 650. What do we have on the docket? Again, just very emotional selling here. I would argue the next major thing to pay attention to would just be the daily 50 SMA, the blue line there at $7.88. So those are my thoughts here on Hippo. If you enjoyed the video, if you learned something new, let me know down below in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.